Welcome to another session of personal finance training. Now, today we're looking at the personal taxes in terms of looking at from the personal perspective. So, from an individual perspective, we're looking at taxes. Now, what has happened is the Chancellor of the Exchequer, Richie Sunak, has made a budget presentation a few weeks ago. And in the budget presentation, he made mention of the fact that the personal threshold would be fixed for a few years. Now, we're going to look at it a little bit more closely to find out what that means for people who are at the lower end, and what's some scenarios about around calculating taxes for, so I would say maybe the middle class, or they're about somewhat the middle class. Some people might think that that's not a middle class, but anyway, we'll look at that. So our objective here is just to kind of look at some scenarios and see who are the winners and losers in light of this presentation that he's made. Now we're going to use Excel, and that should kind of give us a better appreciation, because we're able to actually do the calculations on it. So let's dive into it and see what we can get out of this. I know you'd learn something from this exercise. Okay, so let's do another share screen. I basically did the calculations already, but I'm just gonna repeat it, because you may not have been able to follow. Okay, so first of all, the first thing we can look at here is the threshold, which is 12,570. So that's the threshold. It's 12,570, and there's zero tax. That means, what it means is that if you make up to 12,570 per annum, you will not be taxed. So let's kind of have a look, basically, at it a little bit more closely. Now, can we just maybe consider, first of all, the idea that he's mentioning, the fact that this is going to be fixed, for the next, let's say, 2 years or so, and what that impact is going to be. So if it is going to be fixed, let's just do it. So it's 12,570. Okay, and that's going to be fixed. Now, if we can say inflation is generally about 2% per annum, so 2% is generally what we consider to be inflation. Let's dive into what that is going to what's impact that is going to have on the 12,570. So we divide that using a formula here, 1.02. So we divide it by 1.02. That's going to give us 12,323.5. Okay, so let's say we can actually reduce the decimal places on this to 2. So reduce the decimal places to 2. So that's 12,532.23, or 0.53. So that's generally what would happen if, in terms of within a 12-month period, how it will change. Now, let's look at the original, which is 12,570. And if we minus this figure here, we can see that we would have a loss here of 2,046.47. So basically, that's what happened. If it is that the threshold is fixed, the man at the lower end is going to lose, in real terms, 246.47. in terms of their income. There's going to be a drop, there'll be a dent of this amount in terms of looking at the inflationary side of it. And that's year one. Let's look at what will happen in year two. So again, 12,570. Year two, 1.02. And then we're going to use another little formula here. This is 2 years. Divide this. And basically, it's 12,081. Again, let's just change the decimal places here. Change the decimal places. It's that gives us 12,081.89. Now let's actually then, subtract it. Okay, so this, if we were to subtract it from the original, which is 12,570, we can see here in year two, you'd lose nearly 500 pounds. So, and this is happening to the small man. So the small man is losing money here. So initially in year one, he would lose 246, and in year two, he'd lose 500 pounds. So that's the dent in the financing, in the finances of the small man, or the man at the lower end of the pay bracket, which is significant in a way, and can, per month, 246 pounds is that's shopping, food shopping or so for a family of 2 or 3, and 500 would be similarly, so, and you could even put a few more things in that as well. So that is a significant impact here. Now let's look at what does 12,570 mean in terms of per month. So if you're making 12,570, and if we divide that by 12, it works out to be 1,047.50. So that is what you will pretty much not be taxed on. You're not going to be taxed, so generally that's basically what it is. Now we know that the top end of the next tier is 50,270. 50,270 is the top end. And so if you're making 50,000 per annum, let's just look at it. Some people might be saying you're rich if you're making 50 grand, but let's look at the dynamics of it, because that may not necessarily be the case. Okay, so 50,000. Now, so if we were to look at 50,270 being the top end, so we're gonna mess around with figures, just to kind of give us some idea. Actually, let's put this down here. And we want to work out, I did it before, so I'm just gonna try to copy this and bring it down here. Okay, all right, so 50,000 per annum. And we want to know what it is per month. So this divided by 12 and gives us this. Okay, so basically that's 4,000 per month. We can kind of reduce it to 2 decimal places. So this is what it is. This is what's tax-free, and this is what the gross is. So if we were to find the difference between the two, so we can see the taxable amount. So this 4,000 minus the 1,000, and therefore this is what is taxable. Okay, and this is taxed at 20%. Okay, so if we were to, so this is taxed at 20%. And as I said before, this is the gross amount. Okay, now the tax that you need to pay, or the tax to be paid, let's see how we would work it out. So therefore it is 3,000 141.67. And if we multiply this by 0.2, that's 20%, that gives us 628.33. Again, we can reduce this to 2 decimal places. Okay, and then the net amount, that's the tax to be paid. So the net amount, is going to be now, this is what the net amount is. So this is what is taxable. The net amount here is this minus this. Okay. Now, we also need to add what we deducted, which is not taxable. So we're going to add this bit as well. And so in real terms, you are actually going to be getting 3,560. So that's the net amount that you'll be taking home if you get in 50,000 per annum. Now, you might, if you rent a place for about $2,000, and then you have bills for about 500-600, you just have about $1,000 or so to, you know, do what you need to do in terms of bills and all the other, you know, related matters. So it looks a lot, but it's not as much as it looks. So we've kind of looked at a few things here. One, we've looked at the impact of inflation on the threshold of 12,000. The threshold was 12,570, and we've looked at it. We said that in year one you'll lose about 246.47, and in year two you lose about 488.11. And we've also worked out what 12,570 is per month. So per month, we just want to make sure we write per month. So per month, this works out to be this. Okay, we can put it in another color. So pretty much this is what it is per month. It's not taxed. And then we've worked out the gross amount, find the difference in what's taxable, and what's taxable is 3,000 here, and 20% of that is this. Then with that, the difference gives us, you know, a figure here. We can actually work it out. And then if we were to add, as we did earlier, this figure to it, the actual net amount, as we mentioned, would be 3,560.83. All right, so I hope you learned something from this. Like, share, subscribe. Thank you.